Hello student, today I would like to explain about chapter 10 fixed asset and intangible asset. So will be the last material that I will give you in accounting. So next week we will have review and after that you will have final exam. For the form of final exam, I will inform you later because I need to discuss it first with Dr. Astrid. Yeah. I will tell you the information as soon as possible. Okay, now let's go to the next slide. Okay, I already told you what is fixed asset before midterm exam because you already know how to do statement of financial statement where it's including cash and then current asset and fixed assets. So fixed assets are long-term or relatively permanent assets. Fixed assets are tangible assets because they exist physically. They are owned and used by the business and are not held for sale as part of normal operation. For example, if a company has a car or several cars and they use the cars for their operation, it means the car is their fixed asset. But if the car is being sold, like in the dealer, they have several car, but it's being sold to the customer. It's not fixed asset, but it's inventory. So you should know the difference between fixed asset and inventory. In the keyword is uh, they are owned and used by the business and are not held for sale as part of normal operation. And you expect the asset to be used in the long period. Okay. So for example, like building, land, it's a kind of fixed asset. How to classifying costs? Is the purchase item long-lived? If no, it will become expense. If yes, there are second question. Is the asset used in a productive purpose? If it yes, it's fixed asset. If it's no, it's investment. Okay, so this is the classifying of asset. Okay, initial cost of fixed asset. It includes the whole amount spent for obtaining the asset until it is ready to use. So, freight costs and installation costs are included into the initial cost of fixed asset. For example, you are buying machine for $1,000 and then you have to pay for the freight costs for $100. Okay? Sorry, how much I told you before. Okay, I repeat again. You want to buy a machine for $1,000 and then you have to pay the freight cost for $100. Now, the initial cost of your fixed asset is not $1,000, but $1,000 plus $100. So 1,100. So the value of your fixed asset is the value or the cost of fixed asset plus freight plus installation cost plus any other money that you spend to get the asset ready to be used. Okay, so it will be the value of your fixed asset. Yeah. Now, I told you before about depreciation expense factor. How to calculate the depreciation expense. First, you have to know or you have to calculate the initial cost first. And then you have to deduct it with the residual value and it will become your depreciable cost or book value. Remember, what is residual value? Do you remember? So the residual value is the value you are expecting at the end of the day when your useful life is over. For example, your handphone has useful life of 5 years. It means you are expecting to use your handphone for 5 years. At the end of the year 5, you are expecting that your handphone is still be able to use or to be sold to your friend or someone else through Tokopedia, for example, because you are expecting that your handphone can have some value even though it's already 5 years. It means your handphone is expected to have residual value. Okay, so residual value is the amount that expected to be valued even though your periodic depreciation or useful life is over. Okay, I should get the calculation here to make it easier for you. Okay, so for example, this is handphone. Wait a minute. Your initial cost is 6 million rupiah, and then you are expecting to use the handphone for 5 years. Okay, and then after you are using for 5 years, you expect value after 5 years is 1 million rupiah. Okay, now the initial cost is 6 million rupiah. 5 years you are expecting to use it. It's called useful life. Okay, expected value after 5 years is 1 million rupiah. This is show you residual value. Okay, do you get it now? Okay, I guess it's pretty clear, yeah? Now, okay, I show you how to calculate the depreciation expense by using the straight line method. I already teach you how to calculate straight line method. So this is just to remind you how to calculate it, okay? The formula is initial cost minus residual value divided by useful life. Yes, correct. Useful life. Okay, I need to put it in brackets so that you don't confuse, and you will get 6 mil minus 1 mil divided by 5 year. Correct. And you will get 1 mil per year. This is the value of your depreciation. Okay, I hope you still remember this calculation, but if it's not, it's fine. You just need to review it again, and I will explain it further in the next slide. Okay, Let's continue. There are several kind of depreciation methods: declining balance, other unit of production, and straight line. Most of the company are using straight line because it is very easy to use, and it is approved by the tax office, most of tax office. Okay. This is another example. So the fact is the original cost of an asset is $24,000. The estimated life in years is 5 years. Estimated life in hours is 10,000 and estimated residual value is 2,000. Why does estimated life can be in years or in hours? Sometimes, not sometimes, most of the asset will be estimated in years, but some asset, just like machine, the estimated life, or just like projector, the estimated life is not due to period, but due to how many hours or how many time they are using. So for some asset, the estimated life is not in years but in hours. Okay, so just keep in mind, uh, so that you know not every single asset is estimated by years. Yeah. Okay, this is exactly what I'm saying before. The formula for straight line method is cost minus estimated residual value divided by estimated life. It will become your annual depreciation by using straight line method. Another method will have different formula. But now I want you to get to know how to calculate straight line method. Remember, cost minus estimated residual value divided by estimated life. If the estimated residual value is 0, then you don't have to minus it. But if you want to put it here, it's fine, because cost minus 0 will be cost. Okay, it will become your annual depreciation. So if you're using the last question that I told you before, the straight line method will be the initial cost is 24,000 minus 2,000 is the residual value divided by 5 years. So the annual depreciation will be 4,400. I will review from the question again. Here, 24,000 minus 2,000 divided by 5 years. Yeah, okay. Now, the straight line rate can be calculated as well. How to calculate it? It's pretty easy. Sorry, it's pretty easy. Just 4,400 just divide it by the cost itself, which is 24,000, and you will get the straight line rate 18.3%. The straight line method is widely used by firms because it is simple and it provides a reasonable transfer of cost to periodic expense if the asset is used about the same from period to period. Now, if you're using table, you will making like this table. It's pretty easy. Don't get confused with it. I will explain you step by step. Okay, the first column show year. How many years? This is as much as your residual sorry, your estimated useful life. Since the estimated useful life is 5 years, then you have to write 1, 2, 3, 4, 5. The cost is the initial cost when you buy the asset. Here, the cost in year 1 until year 5 is remain the same, $24,000. The accumulated depreciation at beginning of year, it is the accumulation of your depreciation. Okay, the book value will be your cost minus your accumulated depreciation. Depreciation expense for a year is always the same. How to calculate it? You have to calculate it first. Cost minus residual value divided by estimated useful life will become your annual depreciation, 4,400. Then you have to write down 4,400 from year 1 to year 5. Book value at end of year is easy. Okay, let's start from year 1. Year 1, cost 24,000. Accumulated depreciation at beginning of year is 0 because because the asset is still new. Book value at beginning of year, because it's still new, it will be the same with the cost. Depreciation expense at the year end is 4,400. Book value at end of year, simply 24,000 minus 4,400 will become 19.6. Okay, now if you put attention, the book value at end of year will be book value at beginning of year. Yeah, look again. Book value at end of year will become book value at beginning of year. While depreciation expense for year here will become accumulated depreciation at beginning of year. Okay, see here, 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 here. Okay, now because on year 2 we already fill this from here, this from here, this is the same, so we just calculate the book value at end of year. How to calculate it? Simply 19,600 minus 4,400, it will become 15,200. Again, the book value at end of year here will become book value at beginning of year on year 3. But the difference is located in accumulated depreciation. Here, why you will put it as the same with here? Because this is 0. So 0 plus 4,400 will be 4,400. Now, to fill accumulated depreciation at beginning of year, you have to add 4,400 plus 4,400, and it will become 8,800. Beginning value at book value at beginning of year is already filled because it's the same with this. This is the same, and calculate again here. How to calculate? 15,200 minus 4,400 become 10,800. Okay, just like usual, move 10,800 here. Okay, this is already filled. 10,800 minus 4,400 becomes 6,400. And we forgot about this. Don't forget about this. 8,800 plus 4,400, and it will become 13,200. Okay, now we are moving to the last line. The last line will be 13,200 plus 4,400 will be 17,600. book value, just move from here to here. It's remain the same. And look at this. The book value at end of year will be 2000. It will be the same with your residual value here. If the book value at end of year is not 2000, it means you are making mistake. Okay? Now I want you to do it this. Okay? After you try this, you have to try until you make correct answer. If your answer is still wrong, you need to redo it again until your salvage value or your residual value show 650. Okay, salvage value is the same with residual value. Yeah, so make sure that you are making the correct answer. And after that, after or you're trying to do this, then you can continue to the next video. Okay, happy trying.